The first part of the 2018 income tax season is done. Perhaps you had a client or two who were surprised at what they saw on their income tax return this year. Hello, my name is Christopher Fliss. I am a certified financial planner. I founded and run Resilient Asset Management out of Memphis, Tennessee. I wanted to share a couple things with you today that may be of use to you and your clients. First off, a couple things about tax returns this year that I'm sure you're well aware of. Number one, the widespread use of the standard deduction, which had implications for both the state and local income taxes as well as charitable contributions. Having a client who made a charitable contribution for which they received no income tax benefit may have been something that you experienced. Additionally, qualified business income, a little bit different animal this year for us to deal with in the tax returns, but something that's going to be with us for a number of years to come. And finally, qualified plan contributions, both at the employer and the individual retirement account level. Some interesting things that the tax laws were allowing people to do and not do with those various plans. First, about my firm. At Resilient Asset Management, income tax planning is an integral part of how we service our clients. And in fact, I think it's one of the bigger value adds we have for those with whom we work. We like to work hand in hand with accountants to design the best income tax strategy for our clients, looking forwards, backwards, and down the road a bit to see how they're going to have an optimal income tax plan. Some things where we have some specific examples of things we did in the past year and will do in the coming years. Number one, donor advised funds. Again, with the lack of, or most people taking the standard deduction, most charitable contributions were nullified. To combat this, for several of our clients, we've set up donor advised funds where we put a rather large amount into a donor advised fund that would represent perhaps 3 to 5 or even more years of charitable contributions into 1 year, which would allow them to itemize at a larger level in the year of the forming the donor advised fund, and then in the ensuing years they can make grants out of that fund at their convenience until the fund is depleted, and then we can repeat the same process over again. We help clients open the accounts. We can manage the money within the accounts for the clients, and then assist them with making grants while the fund is still has assets in the account. Secondly, we did extensive work with the UTMA and UGMA accounts with our clients. For those who have children, the rules governing those accounts changed rather dramatically in the Tax Cuts and Jobs Act of 2017. So we were able to, in some cases, transfer appreciated assets into those accounts, which then we were able to avoid capital gains on the first $4,000 or so of gain, and thus utilize capital gain harvesting for those accounts, which would avoid a little bit of capital gains tax for our clients. We also did a lot of work with the Backdoor Roth IRA contributions, either by moving assets into employer plans to allow clients to contribute to a Backdoor Roth IRA, or in some cases just making them aware of their ability to, or the allowance for them to contribute to those accounts. Tax loss and tax gain harvesting within investment management accounts. Investment management is one of the services we do here at the firm, and in our management of the funds, taxes are interwoven into the entire management process. In some cases, tax gain harvesting makes sense, and in some cases, tax loss harvesting makes sense. Again, it's going to be unique to the individual client, but it is something we are mindful of as we manage the client assets. And finally, we do extensive work with qualified plans, particularly for self-employed individuals, to include SEP IRAs or our preferred route is to go the individual 401k route, which has extensive planning opportunities for self-employed individuals. We're able to do both Roth and traditional forms of accounts within the individual 401k. We can open the accounts for the clients, manage the assets within the account, and again work with the accountants hand in hand to make sure that they're deferring as much money as they can, or at least how much that they can afford and want to. And that is again a very large value add for self-employed folks we work with who are able to utilize those accounts. In addition to the income tax part of our service delivery, we work on cash flow management, risk assessment. We don't sell any insurance products or any products of any kind for that matter at Resilient Asset Management, but we do evaluate a client's risk posture via the insurance policies that they have in their portfolio. Additionally, income taxes, as I mentioned before, investment management, and then estate planning as well, working hand in hand with an estate attorney, much like we work with you if we were to work with any of your clients on their income tax needs. So if those are things that you think your clients would be interested in or would benefit from, by all means, we would be more than happy to speak to you about more specifically about how we could do that. If you'd like, you can have a look at the rest of the website, tell you a little bit more about the firm. I have a couple links below this video that have some sample plans as well as the most recent Form ADV filed just a couple months ago for the firm. If you'd like to get in touch with us, please let me know, and then we'll see if we can set something up and see what we can do for your clients. Thanks for the time.